you wanted the best, you've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hey folks, it's Voss here from thechrisvossshow.com. There you go, ladies and gentlemen. There are nice things that makes official. Welcome to 16 years, 2,800 episodes of the Chris Voss Show, because we just want to make the world a better place. We want to have educated people, smart people, people that know their stuff. And so that's why we have amazing, brilliant minds on the show and some idiot with a mic. To refer the show to your family, friends, and relatives, go to goodreads.com/Chris Voss, linkedin.com/Chris Voss, and Facebook.com, youtube.com/Chris Voss, all those crazy places in it. Today, we have an amazing man returning to the show. His book is entitled Claims Made Insurance, the Policy That Changed the Industry, a deep dive, review, and history, out June 18th, 2024 by Frederick J. Fisher. We're going to get into it with him, find out all the deets, what's going on in the insurance departments areas. Insurance
too much for your 1 hour show. I'm still trying to figure out why you're having me back. I mean, did you do something to tick off your partner when he said, all right, have that guy Fisher on again? I know how to punish you.
No, we really enjoyed our show with you. So You've had more than 50 years of investigating claims, consulting on complex disputes, and serving as an expert witness and training in the next generation of claims professionals. You speak uncomfortable truths without apology about the industry being hijacked. Insurers evaluate rather than investigate claims. Policy owners are forced to prove their own losses. Companies are financially incentivized to delay payments, and people don't feel protected. So let's get into it, Fred. Give us any .coms. Where do you want people to find you on the interwebs?
My website is Fisher, Fisher, and that's Fisher CG. C as in Charlie, G as in George.com. FisherCG.com is my website. And if anybody that's having trouble sleeping, there's a bunch of articles you can download if you want, or maybe punish yourselves. And then of course, the book is there as well, where you can click on it and it'll take you right to Amazon. And again, you can buy it and punish your children some more. But, make them learn about the world of insurance. But the bottom line is, as much as we love to hate insurance companies, or maybe hate to hate insurance companies, as the case may be, nothing's going to happen without insurance in this world. Because nobody, very, very few people or even companies can afford the costs of a major event and without insurance. It just can't happen.
Yeah.
And further, when you think about it, things like doing medical testing, and all that stuff that goes on, that's not going to happen without liability insurance. You have to have it.
Yeah.
Major buildings being constructed, without insurance, not going to happen, And so that's the real world. And as much as we've always loved to hate insurance companies, they're always looking for a way to avoid paying claims. You know what? It's more true now than ever, and certainly intentional, very intentional. I've lost count of the number of articles I have from prominent lawyers, some of whom I know, that have written articles on hire us, we'll help you write language so that you don't have to pay claims. Oh, wow. And so in today's world, it used, in the old days, you grew up with an industry where when there was a loss, they would investigate it. They'd send their own boots on the ground investigators or independent adjusters out and assess it and try and reach a fair settlement and get the file closed as fast as possible. Because the faster you settle a claim, the cheaper it's going to be. And hopefully, when you close a policy year, they can say, okay, we took in $10 million in premium and we paid out $9 million in claims. So we're doing pretty well. We've added $1 million in profit, and some of it goes into operations. Some may go to stock dividends to stockholders. But the most important thing they do is create after-tax money, these after-tax dollars, to go into what's called capital surplus. Capital surplus, by definition, is an industry term, and it's that amount of money that's used exclusively to support underwriting and pay claims. There's often this thing called a premium to surplus ratio, and that is if you have $10 million in capital surplus, how many $1 million policies are we allowed to sell?
Yeah.
But because of, and then the actuaries take a look at, how many claims, they're out there and how much we pay and whatever. And so the bottom line is, if you're going to take in $1 million in premium, how much capacity do you have before, you may not be writing too much? And so if you're an insurance company that's writing general liability for slip and falls kind of thing, writing offices in an office building, where there is accountants and lawyers and consultants, whatever, how often do people get hurt in their office?
Yeah.
A customer. So that's called a soft risk. And so something like that, they may allow a company to say, okay, you got $1 million in capital surplus to write general liability for these kind of risks. We're going to let you write $4 million in premium. So that's 4-to-1, premium to surplus or premium. Huh. And that's considered healthy. But on the other hand, if you're writing environmental liability for oil spills, Department of Insurance may say, it's not safe for you to write more than 1-to-1. You got $10 million in capital surplus, you can write $10 million in premium.
Wow. That's wild. Some of these regulations stipulate that, huh?
They do. And it's done to maintain the viability and profitability of the insurance company so they can pay claims.
So it's not, that probably came out of the too big to fail sort of.
Yeah. And at the end of the day, that's what it's about. Now, it wasn't that long ago I went to a cocktail reception for the new American CEO of a major insurance company that's remained nameless. And for half an hour, this guy was talking about how the board of directors is allocating millions of dollars in capital surplus to all these various underwriting divisions. And all they expect is a reasonable rate of return on the money they're investing in the director and officer liability department or the general liability department or the homeowner department. We're giving you this capital. We expect a reasonable rate of return on our money, i.e. we expect you to be able to write business and leave a decent rate of return profit at the end of the day.
Wow.
And I'm in this meeting, and I kept thinking to myself, is this guy an accountant or an insurance guy? And it turned out he was. He was a CPA.
Oh, wow.
And so it was like he hasn't got a clue what an insurance company is supposed to be doing.
Oh, wow.
All the board cares about is we're giving you $100 million and we hope you at the end of the day, we got, $5 million left after everything is paid or whatever. That would not be a reasonable rate of return. They're probably looking for 20, we want 20 million in profit on top of it. So are you kidding?
Yeah.
You think I'm meeting with a policy holder day after tomorrow, and I'm going over his renewal for director and officer liability coverage and employment practice coverage and stuff to cover them for it's called fiduciary liability for employee benefit programs. And on top of it, they got an E&O exposure too, and they're spending $380,000 on their premium. Do you think they want to hear that premium is going to go towards giving the insurance company a reasonable rate of return on the capital they're allocating to write that piece of business, or do you think they want to hear, I'm going to be here for you when you have a claim that we're insuring?
Wow.
Not a word was said about that.
Uh-huh.
And that really is sad. But to me, it's a trend. Insurance companies today have lost their mission. At least, and I don't want to paint a broad brush, but a lot of the major insurance companies have lost their mission. And now with the monopolization going on, because more and more good insurance companies are being bought up by the big conglomerate corporate stuff. And my worry is that the quality of coverage, the quality of service, the quality of everything is going to go down.
I think we've seen that. Weren't you the gentleman I had on the show or person on the show? I can't remember who it was, but I've cited it a few times that basically the insurance companies are building back doors into the language of their policies to where they can basically deny claims on just about anything for any reason.
There certainly is that going on, and it's blatant. I know some prominent law firms, who have authored articles on exactly that. Wow. Hire us; we will help you write policies so as to avoid more costs and avoid paying certain claims.
Wow!
And it's intentional. And one of the things that also you're seeing are the courts are helping them.
Wow.
There's been a shift in what the focus is. And now the shift is the conservative view that we're going to fanatically enforce contracts, the sanctity of the written contract. And if it's clear and unambiguous language, we're going to enforce it. That's what the courts have said. We're enforcing clear and unambiguous language. Number one, clear and unambiguous to who?
To who?
The average consumer or somebody who's trained?
Yeah.
See, that's number one.
Yeah.
So that's a fantasy right there. Number two, that's not the purpose of insurance. The purpose of insurance is not to enforce a contract that's clear and unambiguous. The purpose of insurance has always been, or should, up until recently, has been to put the policyholder back in the position they were in before the loss.
Yeah.
And it doesn't matter whether it's a first-party claim for property damage and fire losses or whatever, or a liability claim where somebody is injured, and you gotta pay money for that. They want to put everybody back in the position before the loss, and that is falling by the wayside to just being a cash machine. We're bringing in this money, and we want to do whatever we can to keep as much as we can.
Wow.
And the National Association of Insurance Commissioners, the NAIC, they certainly are doing their best to deal with certain things about like artificial intelligence and privacy and that sort of thing. But when it comes to policy language, they're turning a blind eye to it. And they're allowing this other stuff to happen. And they know what's going on because I've told them. I have written. I think on prior shows I've brought up, problems with the claims-made policy and how complicated that's gotten. And if anybody out there, if you're providing a service to somebody else for which you charge them a fee, that's a consulting fee. That's excluded under your general liability policy. They don't cover professional services.
Oh, really?
Yeah. You have to buy an error and omission policy or a professional liability policy. That's been my specialty for 50 years. It's also written on a claims-made basis. Unlike your auto policy, unlike your homeowner policy, unlike most commercial general liability policies that protect you from slip and falls and that sort of thing, those are all written on what's called an occurrence basis. And that means that the accident must take place during the policy term. Like having me on your show today might be considered an accident. But as long as it takes place during the policy term, you may be covered.
I knew you were coming.
But here's the other side of it, though. For professionals, to anyone who's providing a service for a fee, consulting fee, or a lawyer, or accountant, or architect, insurance broker, real estate broker, lawyer, doctor, the X-ray technician, at a clinic you go to get the X-ray or what have you, those are all providing a service for a fee. And sometimes, or often, when a professional commits an error, nobody knows about it. You're not immediately injured. Unlike running a red light and hitting a car or making an illegal right-hand turn and hitting somebody in the pedestrian walk, they're injured immediately. You know you've injured them immediately.
Yeah.
You may not know how badly.
Yeah.
But that's immediate.
I used to get out of the car and be like, why are you covered in blood? No, I'm just kidding.
Yeah, that's what I didn't do it.
That's Fridays.
The horse did it.
Yeah, the horse did it.
Did you have a horse there?
Yeah.
But anyways, that's the reason for it. So when you're an architect and you make a computational error involving the load factor on a pedestrian bridge, nobody's going to know that you committed an error. So that pedestrian bridge falls or fails.
Yeah.
And it may never fail, But the point is, how do you underwrite something like that? How can you project future claims when they may take years to even develop or take place? So that was a reason for the claims-made policy, because now what triggers a policy is not when you committed the error. It's when somebody was injured by it, and then they decide to do something about it, hire a lawyer to sue you or send you a nasty letter or pick up the phone and call you and tell you, I'm taking you to the EOC or EEOC because you've discriminated against me, okay? But that's what triggers your policies when somebody over whom you have no control decides to say, you harmed me and I'm doing something about it. And so from an actuarial perspective, that's hard to project. So that was the reason why they came up with the claims-made policy form. And it makes perfect sense, but it's dangerous. When I first got into business 50 years ago, there was only really one condition. And that is a claim be first made against you during the policy term and that you didn't know about your error when you signed the application. That was it.
Yeah.
Now there's 5.
Wow.
Up to 5.
Mm-hmm.
And they're dangerous policies. And there's reporting requirements. If you don't report the claim as instructed in the policy, you may not be covered. You have to report the claim during the policy term. Otherwise, you may not be covered. And I'll tell you, some of the smartest brains in the country have blown it. In just the last year, I think, or two, major companies like and universities, USC, Harvard, Cedars-Sinai Hospital, Wayfair, and the Blake Lively lawsuit, they all knew something was going on. They all received complaints about something. They all started doing an internal investigation, except they never told their insurance company about it.
Oh, wow.
And so when the application comes up for renewal and there's a question that says, are you aware of anything that could be going on that could later turn into a claim? And you answer no, you've lied.
Wow.
Because there is something going on. You got an investigating team looking into these allegations, internally. And you don't think that that's going to turn into a potential claim? Of course it is.
Yeah.
And that's why these entities that I just discussed had when it finally blew up and they got served with a major lawsuit, they turned it into their insurance company. And the insurance company said, sorry, we're not covering this because you knew about it for the last 2 years, even longer. And then that's why.
Wow. Yeah. Now, is the Blake Lively insurance thing? I'm not sure I remember this correctly, but is that what you cite in your book, the claims-made insurance, the policy that changed the industry, or what was?
Blake Lively apparently claims that she was harassed by her co-star in a movie, and I guess it was and the parent company was Wayfair.
Oh.
And they spent at least a year or more. I forget the exact timeline on it, but they apparently had known about the problem internally and were trying to keep a lid on it, so to speak. But they never reported the potential problem to their insurance company, which they should have done.
Yeah.
And had they done that, they probably would have had coverage. But now they're on their own. They don't. And the same is true of the other entities. USC spent at least 2.5 years investigating the claims by women in, I guess, their gymnastics, I think it was. But there may have been others as well. But they were reporting problems with a particular doctor for quite a while, and they kept a lid on it.
Oh, really?
And of course, when it went public and the lawsuit started, they were without coverage because they didn't disclose it and they didn't report it when they should have.
Oh, wow.
Because the claims-made policy does have a safety net in it. Nobody's made a claim against you, but you know you did something wrong. Like an attorney, what do you do when you've blown the statute of limitations? You know that your case just got thrown out, and then you spend 2.5 years trying to fix the problem, and yet you continue to answer applications for renewal, saying we're not aware of a problem that could give rise to a claim. Of course you do. As soon as you're trying to fix a problem, you've got a problem to report. Yeah. And so you can avail yourself of what's called the safety net of a claims-made form. You can report a potential claim, and that triggers the policy.
That is crazy.
And it is crazy that people, for whatever reason, they think, if I report my claim, my rate's going to go up. Number one, that's not true. And even if it does go up 10%, you're paying $3,000 a year or $4,000 a year, so it's going to go up $400. Okay, that's a heck of a lot less money than the hundreds of thousands you're going to have to pay because you're uninsured. Yeah. So you have that going on. But and so these kind of problems fall in the category of, number one, read your policy. Number two, never, ever, never buy on price. We're being brainwashed into thinking, gee, we can save $400, $500 moving into another insurance company. But let me surprise folks. No two policies are identical. One auto policy from one major carrier is different than another automobile policy from another carrier because the Department of Insurance doesn't mandate what's required. They set minimum standards. Here's what you must do. After that, you can do whatever you want as long as you get approval. So the policies are not the same. If you're saving $800 a year moving your insurance from one carrier to another, what if you give it up?
Yeah. That's a
the
good
same with
question.
your homeowners. The same with your property insurance, your rental coverage, and big corporations. Same thing. Everybody wants to save a lid on the cost of insurance. You know what? When you have a claim and you find yourself you're underinsured, or you didn't cover this particular hazard, or you didn't cover that particular hazard, now tell me how much you've saved. You can't do it.
Yeah.
And I don't know. Have we discussed the order taker standard of care with insurance agents in the past?
I don't remember if we did that before, but go ahead and recap on that.
Here's one thing you can't do. 37 states, and California is one of them. We actually, arguably, we started it in 1987. But your insurance agent, your insurance broker or producer, as it may be called in certain states, guess what, folks? In 37 states, they have no duty to advise you.
No fiduciary duty.
That's right.
I remember
duty.
We talked about this, yeah.
That's right. Mm-hmm. And it's easier to probably tell you the states that don't follow this. It's Arizona, Connecticut, Georgia, Hawaii, Idaho, Michigan, Montana, New Jersey, Pennsylvania, Virginia, Washington, D.C., and West Virginia. Now, what's interesting about this, New Jersey passed a statute in 2019 holding insurance producers to the highest standard of care. It's called a fiduciary standard, much like your lawyer has a fiduciary standard.
Yeah.
And Florida has done it by case law. So it's interesting. California is supposed to be an ultra-liberal state. We're more conservative than Florida, which is, a true conservative state, and they're more liberal than California. Go figure that. There's other problems in Florida with the insurance industry, but that's not why we're here today.
Oh yeah, the condo stuff and hurricane and homeowners and yeah.
So it's like going to your favorite restaurant. Your order comes over and tells you what the specials are for reasons that they have to get rid of this stuff. And
I love how cynical you are, Fred.
You want to order the fish
Just
today,
call it right the fuck out.
Throw it all out tomorrow, but they don't have a duty to. They have no duty to you, but other than to answer your questions. Okay. So it's, you want an insurance agent that has no duty to advise you? Do you want to make sure that you know what you need to know? Now, I don't want to paint a broad brush here. There's a lot of
it's
really
not negative
agents.
At all there, Fred.
There are a lot of good agents. There are a lot of good brokers who do care. You got to find them. That's number one. Number two, shop your coverage.
Yeah.
And
shop your coverage.
Not for price, for coverage. Remember, shop for coverage.
Yeah.
And I'll give you a good example of it in a second. But the point is, if you go to a captive agent, and don't get me wrong, there's nothing wrong with the captive agent model. Mm-hmm. I mean, State Farm used to be a great company. They have issues right now. Farmers a lot of farmers agents do great work, but they're captive pretty much. Farmers agent can go to other insurance companies if, number one, he's properly licensed, but he has to give farmers first right of refusal. So if farmers says we don't want this, is out of our guidelines or whatever, then he's free if he's properly licensed to go anywhere else.
All right.
Okay, and I know a lot of good farmers agents. State Farm agents are 100% captive. So that means they're only going to get you one quote. That's with State Farm, and they can't go anywhere else.
I'd never do business with State Farm because of that one lawsuit they had that was really famous where there was a couple, I think their house burned down or something happened to their house, or something. I don't remember what it was. There was like an older couple and they were denying their claim and they just waited until the people died. And I think they dragged it on for 10 or 20 years. Seeing that.
There are instances of that. I even handled one resulting from the Woolsey fire.
Yeah, I believe State Farm was also pulling out of that around that time. They were trying to get out of that area.
Yeah, they really, the case, all I can say is the case got settled, thank you. And I was very happy that I was one of the experts on that case and helped that along. But there's good and bad everywhere. I mean, one bad actor for an insurance company doesn't mean the whole carrier is bad. But some carriers are notorious for it.
I don't trust them further than I can throw them, so there's where I'm at.
But, part of the problem, too, and I've got an article in draft right now, is the fact that a lot of insurance company personnel are run by accountants, and they see the claim department as a cost center. And that's absolutely wrong. The claim department is not a cost center. It's the profit center of the company, believe it or not. Everything about insurance is backwards from any other business.
Wow.
And unfortunately, the accountants haven't figured that out yet. It's amazing to me. You walk into a grocery store and you walk out having purchased $100 worth of groceries. Okay. The profit that the grocery store has made is immediate. And they can do whatever they want with that profit. They can allocate some of it to, giving somebody a bonus, allocate more money to having the capital to buy more goods to replace what you just bought. Part of it may go into advertising, and then the rest of it goes into profit, before tax profit, and then they'll do whatever they want with it. That is not true of insurance companies. They get a $10,000 premium check from you. That's not profit. It's unearned. It's unearned premium. That's the technical phrase.
Oh.
And you can cancel your policy anytime you want usually, and you get prorated premium back. So that $10,000 isn't fully earned until the policy year's over.
Oh wow!
They see this cash flow coming in, and now is how do we keep that money? See, and part of that money is supposed to go into capital surplus. Part of that money is supposed to help support claims and claim payments. But they're seeing the claim department as a cost center, so they want to keep the overhead down, cut the staff, tie the hands of defense counsel with really ultra rigid attorney management guidelines. We don't want to spend a lot of money on litigation. And then they want to delay everything as long as possible because we'll get cheaper settlements, which of course is wrong. It doesn't always happen. Most of the time it doesn't happen. And so what are you gaining here? And you're also you may be violating the code. You're supposed to have your coverage determined in 45 days. You're supposed to pay claims as soon as you realize there's liability and exposure. You're supposed to make fair and reasonable settlements. They're always finding a reason not to. And so the business model is now changing where we want to keep the money coming in as much as possible. The claim department is a cost center. So how do we do this legally? You get insurance coverage attorneys to help write policy language to limit the amount of claims, to limit the type of things you're really covering, even though you used to cover all these different things. Now you're going to start limiting it. And they're using what are called absolute exclusions to do it. I don't know if there's time to go into that, but but I have articles on my website about it. If anybody's having trouble sleeping, you can download the article. But these are articles that are there. There's even an article about, One River, Two Currents, I think it's called, talks about the demise of the order taker, or how the order taker standard of care has changed what you can expect from your insurance agent. And frankly, the order taker standard of care doesn't even work. I mean, the point is, you can't be legally liable if you don't have any duty to advise. Okay, so you're still going to get sued. And 80% of all cases settle. So what is being accomplished here except helping defense lawyers build bigger homes? If you gave the advice, chances are you're not going to be sued. And even if you are, it isn't going to last long if you document. So for all of you professionals out there, whether you're an insurance broker, real estate broker, accountant, whatever, architect, document. And if it's important, you giving advice the client doesn't want to follow, put it in writing. Because the last thing you want to do is have one of these, you told me, I told you this. No, you didn't. Yes, I did. I changed my mind. That's you're going to have that. And that's what you don't want. I wrote an article about that. It was actually called Document to Prevent E&O Claims, Malpractice Cases. I wrote that article in 1979. And I wasn't the first. I'll never claim that. But there was four of us that were really hell-bent to help people understand how you can avoid being sued. Here's the things you can do. Eventually, lawyers decided that's a good idea, and they called it best practices, but that didn't start until the mid-1990s. So I guess you could say I'm one of the four people that invented best practices. But if you act within the concept of best practices, you do the utmost. You bend over backwards for your customer or your client. Chances are they're going to be really happy. Chances are there isn't going to be a problem. And if there is, chances are it's not going to last very long as you've documented what you told them to do. It's just amazing that lawsuits now I do expert witness work now that I'm kind of semi-retired from the industry, but I still need a reason to get up in the morning, and I do expert witness work. And I would say the vast majority of the cases I'm handling, especially against insurance brokers, was avoidable. Why are we here? All you had to do was this, and this, we wouldn't be here today. So I can argue until the cows come in.
Yeah.
Most people aren't going to follow the advice anyways. So the idea of documenting everything has been around since the 1970s, and it's still amazing to me how many insurance brokers and lawyers and doctors, everybody doesn't document the advice.
Wow.
You have the knowledge, use it.
Yeah, document it all. Everything documented.
Yeah.
So as we round out, tell us about the offerings you have on your website. What help do you offer to either businesses or consumers, and that people can tell?
Well, the website is really was originally designed to be informational. Here I am. I do expert witness work, blah, blah, blah. But it's also got a lot of the articles that I've published over the years is up on it. And, some of these articles may be of interest to people, especially, again, we're in more of a service-based economy more than ever, and we have been since the 1990s. And as a result, that sort of service, again, requires professional liability insurance. But it's tricky. It's, there's so much you need to know. Generally speaking, professional liability is considered an economic loss in the sense that if I'm a professional and I screw up, you've suffered an economic loss. And so bodily injury and property damage is usually excluded. But that's not always true. Safety consultants, they commit an error. There's going to be bodily injury and property damage. If an architect commits an error, there's going to be bodily injury and property damage.
Yeah.
And so forth. So there are endorsements to cure that problem. But you've got to be talking to a knowledgeable insurance broker. A moment ago, you asked me about what's on my website. As I mentioned, there's stuff about my book and how you can buy it. There's stuff about me, in case you're interested in that. And now that most of my parents and my aunts and uncles are gone, maybe nobody's interested anymore. But I do have a bunch of articles. And for anybody that's a professional, or anybody who has a kid that's a professional, or going to law school, or they're already a professional, this is stuff they may need to know. Because professional liability and management liability coverages for people that are directors and officers, take this stuff seriously. And again, it's not the size of the organization. It's not the amount of premium that's being paid that matters. It's the hazards of what you're doing. To me, the fact that I'm insuring a small little, business organization, kind of nonprofit, or the local little league, so to speak. Yeah, $1,000 you get your D&O insurance, or maybe even it'll be a package with the CGL and whatever. It's a $1,500 policy. Now, but the hazards for that organization are no different than a $15 billion a year company spending millions on insurance. The hazards are the same.
Yeah.
So what makes you think you got to put a lot of time into that 6-figure premium account versus a $1,500 account? I got a news for you. You're more likely to get sued on a $1,500 account than a monster, a whale, because the hazards are the same.
Yeah.
And if you screw up on a little one, you can screw up on a big one too. And if you screw up on a big one, you can screw up on a little one. And as I told my employees, I don't care that it's a $1,500, a little nonprofit D&O account, a local business organization or something, or the local little league. It's the hazards. They're the same as, writing a major corporation. Put the time in. Otherwise, we're going to be looking at, a $2 or $3 million lawsuit. And this is what people don't get. And I've seen it happen. If you're a small company and you go to even a regional privately owned insurance brokerage, they probably have a small business unit there, and they're going to automatically renew you every year. Meanwhile, your business model's changed. You're growing. All of a sudden, you're no longer in research and development. You're actually selling your product. Maybe your insurance agent ought to know that. But on top of it, maybe they ought to pick up the phone at renewal and ask you, anything new going on we need to know about? Because it's so easy to do auto renewal. Just automatically renew. And the same with the insurance companies. It lowers the overhead. But the hazard hasn't changed. It may have gotten worse. Pick up the phone and ask. Yeah. You're going to avoid a lot of grief from a policyholder or a client. And policyholders, take this seriously. Don't take insurance for granted. Because it's not. It's there to protect you if they have a loss. And that's not when you want a surprise.
Yeah. Not a surprise at all. So how can people reach out to you on your websites, consult with you?
My phone number is there. My how to contact me is there. There's a contact us, button you can push on it. It tells you how to call me and that sort of thing. and what my email address is. You can fill out a form as well. We do not collect or keep any data of any kind.
Mm-hmm.
We don't take credit cards either. And so that's one way of getting a hold of me. But I'm happy to help. But the point is, you got to expect more from your insurance broker and do it in writing. If you're in a state that follows the order taker standard of care, you got to make it clear what you expect. And saying to your agent or broker, I want the best coverage, I want to be covered for everything, is meaningless, has no merit whatsoever. You're going to have to be a little more explicit and clear than that, because it's overly broad. And the courts have said that. It's meaningless. I want to be covered for everything. Number one, that's impossible. Can't be covered for everything.
Yeah.
Number two, no two policies are alike. 3, never, ever buy on price. 4, read the policy. I admit, yes, they're complicated. They're difficult to read. They're difficult to follow. But there are some things you can spot. Maybe the dates are wrong. Maybe the limits are wrong. Heck, they may even transpose the number on your address. That's pretty obvious stuff.
Yeah.
And, if your fire limit is $400,000, okay, what's the code and ordinance coverage? People that doesn't show up on a deck page. That's in the policy itself. Code and ordinance is designed to provide the funds necessary to rebuild according to the current building codes. That's technically an improvement. Insurance policies aren't supposed to cover improvements. So for instance, if you've got Formica counters and you want to upgrade you have a total loss, and you want to upgrade to marble, they're not going to pay for the marble. They'll pay for the replacement of the Formica, but they're not going to pay for marble. That's an improvement. The same is true of building code upgrades. However, the policies do cover that, but it's a sublimit. So if you've got a $500,000 fire limit, you may only have $50,000 in code and ordinance coverage, 10%. My house is as old as I am. I know how much it costs me to maintain my body, manage the house. When I realized my code and ordinance coverage on a 75-year-old house was only 10% of the fire limit, I went, oh my God, there's no way that's enough.
Yeah.
And I increased it. I called my insurance company, because I have a direct writer, and I called them and I said, hey, how high can I go? And they told me, and I said, do it. And the same is true of all the other little coverages you've got, like personal property. Is it really? I used to think that $300,000 in personal property coverage is an awful lot. My wife said it may not be enough. Look at the stuff we got here, and to buy it all new, And then of course, how about additional living expense? ALE, additional living expense, that pays for you to get a 2-bedroom or 3-bedroom apartment while your 2 or 3-bedroom home is being rebuilt, or condo.
Yeah, that was probably a feature for a lot of those people.
And some of that stuff is limited to 1 year or 2 years. There may be a limit on it. Is all we're ever going to pay. But what you want is actual loss sustained.
Yeah.
That's normally, depending on the language, actual loss sustained will pay you until it's done.
Oh.
That could be more than a year or two, and they'll pay the rent on a 2 or 3-bedroom, apartment. I got a 3-bedroom house. Now I might bargain at that because I don't need all 3 bedrooms, but can I get a 2-bedroom apartment so at least my wife has somewhere to go where she can be alone and get away from me? Yeah, they'll pay for that. But you want actual loss sustained. So these are the kind of things you need to go over with your broker. I need to know what I'm covered for, what I'm not covered for, and whether or not these sublimits, which I don't understand, are adequate. And just have these discussions. Put your expectations in writing. More importantly, take the time. Sit down with your agent. Sit down with it. Don't take this stuff for granted. Auto and homeowners insurance, you think that's complicated. If you're a business owner, same thing. Don't tell your insurance broker, we got half an hour to go over 7 policies that are renewing.
Yeah.
Take the time.
Take the time, folks. Take
the time. You're talking about your financial security.
Yeah. Frederick, thank you very much for coming to the show. We really appreciate it.
Oh, my pleasure.
Give me your .coms one last time as we go out.
It's my www.fisher, C as in Charlie, G as in George.com. Fisher without a C, FISHER. Like Body by Fisher. I'm a walking Chevrolet.
Aren't we all? I think I'm one of those old Impalas that's 5 miles wide.
They don't have the Body by Fisher thing on the emblem anymore. On
I remember that though.
Yeah, they did away with it.
I used to look at that and be like, "Who's this Fisher guy? What's his deal about?"
No, I'm not part of that family. I'm not part of the family.
Thanks for coming to the show, folks. Pick up the book wherever fine books are sold. You either run the game in life and stay educated, or the game is run on you. Run the game. Claims Made Insurance, the policy that changed the industry. A deep dive review and history out June 18th, 2024. Thanks so much for tuning in. Go to goodreads.com/Chris Voss, linkedin.com/Chris Voss, Chris Voss 1 on the TikTok, and all those crazy places in the internet. Be good to each other. Stay safe. We'll see you next.
You've been listening to the most amazing, intelligent podcast ever made to improve your brain and your life. Warning, consuming too much of the Chris Voss Show podcast can lead to people thinking you're smarter, younger, and irresistible sexy. Consume in regularly moderated amounts. Consult a doctor for any resulting brain bleed.
All right, we're out, Fred. This